This is the Best Stocks to Buy podcast. Looking for quality stock tips? Well, we bring you timely investment ideas based on the latest stock and market outlooks. Our ideas are driven by a proprietary software that reviews, analyzes, and ranks over 6,000 stocks every week. So you may hear the name of a company you haven't heard of before. And you know what? That is often the best kind of opportunity. An opportunity to get in early before the investing masses. The Best Stocks to Buy podcast is made possible by Connor Management Group, a registered investment management firm serving individuals, business owners, and family offices. Hi, everyone. This is Mathis Connor with Connor Management Group, and this is the Best Stocks to Buy podcast. Today is Tuesday, April 23rd, 2019, and this week we're going to review the best dividend stock to buy right now. And on to our opening slide. It's called the setup and the approach. Now, the key objective of this podcast is to present to you a high probability upside potential stock, and we think we found a great one this week, particularly a high dividend paying one as well. Now, the key tool we use is a financial model, a proprietary tool that we developed that uses multiple valuation approaches across over 6,000 stocks every week. So the view you're getting is not driven by some sensational headline and some popular publication, but it's focused on increasing. It's focused on presenting to you the best investment opportunity we could find. Now, an easy way of thinking about approach is to think about the method of triangulation that law enforcement uses to locate a cell phone. In our case, we use a form of triangulation to locate a future stock price using different valuation methods. Now, I truly viewed creating such a model as daunting, but I believe I was well prepared for the challenge. I have both computer programming experience as an engineer and over $15 billion of transaction experience as a Wall Street banker. So my approach didn't come overnight. I painstakingly reviewed over 40 years of white papers, taking away the best each had to offer, and then added some of my own tested intuition to implement new data sets that weren't even available as little as 10 years ago. Furthermore, our model uses both historical and projected values and takes into account management's historical accuracy of meeting the projections that they share with the public. Now, a point worth remembering is that these views are based on today, an unforeseen economic report, a regional conflict, a revised policy can change these expectations tomorrow. A benefit of using a professional money manager like Connor Management Group is having someone experienced in making educated assessments about the uncontrollable, as well as having someone readily available to share their opinion with on a particular event. And now, so what did our model find for you this week? Well, turns out the best dividend stock to buy right now, we found it to be in the air transport industry. Now, just to level set, let's review what's going on in the air transport industry. The air transport industry is a multinational business that is greatly affected by different world economies and, as you can expect, fuel costs. So here are some of the 6 largest competitors by market cap, as you might expect. Federal Express, United Parcel Service, American Airlines, Atlas Air Worldwide, Allegiant Travel, Alaska Air, Copa Holdings, Delta Airlines, JetBlue Airways, and Southwest Airlines. The growth drivers are modest GDP outlook domestically, positive revenue growth going on across the industry, and receding fears about a recession. Now, some of the industry challenges are the past partial government shutdown, which modestly affected demand, and low fuel costs may inadvertently drive price competition. So as the price of fuel comes down, these carriers may lower their price, and then they get into a competitive situation. And an additional industry challenge that's on the horizon is Amazon's.com's own delivery division. The unit is being built out and may not have a great impact right now, but potentially may eventually impact demand for these larger carriers. And now for the big reveal. The best dividend stock to buy right now is a company called the United Parcel Service, UPS. Everyone's familiar with their brown trucks going through the neighborhoods. The ticker symbol is UPS, and we see the 6-month upside potential at greater than 20%. On to the quick facts slide. United Parcel Service Incorporated is the world's largest integrated air and ground package delivery carrier. It also provides specialized transportation and logistics services. Service is offered throughout the United States and in over 220 countries and territories. Domestic package operations accounted for 62% of 2017 revenues. International operations accounted for 20% of 2017 revenues, and supply chain and freight business accounted for 18% of 2017 revenues. The fleet owns and leases 581 planes and 119,000 ground vehicles. The website is www.ups.com. The company is headquartered in Atlanta, Georgia, and they were founded in 1907, and they have 248,150 employees. On to the next slide, called Metrics. The annual revenue for UPS over the last 12 months was $71.8 billion, so this is a huge company. The net income over the last 12 months was $4.8 billion, and cash from operations was $12.7 billion. This is definitely very sizable. The operating margins for 2019 are tracking to be 14.0%, and for 2020, the operating margins are expected to be slightly higher at 14.5%. Now, onto the valuation metrics. The trailing PE ratio is at 20.7, and the forward PE ratio is at 13.9. And that relationship means that earnings are expected to increase substantially. The PEG ratio is at 1.7. 1.0 is usually considered a bargain. 1.7 isn't too high. The price to sales ratio is at 1.4. The price to book ratio is at 32.5. And the enterprise value to EBITDA ratio is at 15.1. The company pays a dividend yield of 3.4%, which is quite healthy. And the average dividend payout ratio over the average over the last 3 years was 50%. So that means that the company on average pays out 50% of its income as a dividend. The next slide is a price chart of UPS. And let's see, the stock price is near its year-ago levels, but it has had some advancements and pullbacks. The stock price right now is around $114. So the slide says the stock price pulled back in the fourth quarter of 2018 due to a slight earnings miss, but rebounded the next quarter, the first quarter of 2018, due to improved revenue per package figures. So as we'll get into, the company has made a number of operational improvements that it's starting to see the benefits from. The next slide, it's called Looking Back and Looking Forward. Now, looking back, United Parcel Service's fourth quarter performance was good, with earnings per share up 16% from a year ago. For 2018, The revenue per package was up 5% from a year ago domestically and up 4.6% overall from a year ago. So the company is doing well domestically and overseas. In the United States, United Parcel Service delivered 21 million packages per day, with most of its growth stemming from next day air service. And the European business grew despite all the concerns about Brexit. Looking forward, some economists expect softer export and GDP growth from major economies due to uncertainties over trade policy. Management expects 2019 domestic revenue to increase 4 to 6% due to price hikes and improved productivity. UPS is expected to benefit from prior productivity improvements. In 2018, the company retrofitted 22 facilities with cutting-edge automation and productivity tools. And it seems like these improvements are starting to hit the bottom line now. In 2019, 80% of ground volume is expected to go through automated facilities versus only 50% of ground volume going through automated facilities in 2017. The company is partnering with e-commerce platforms Shopify and ShopRunner to raise its small and mid-sized business market share. On to the next slide, the why now, the bull rationale. Now we expect United Parcel's share price to increase for the following reasons. Going forward over the next 2 years, the company is expected to increase its sales and revenues per share. Right now, the company has a modest to low valuation metric, but in the near future, its valuation metric is expected to come down significantly, which will create pressure on the prices to increase. And additionally, the company is reducing its debt, which is expected to eventually create additional cash flow for shareholders. On to the summary slide. The financial statement quality for United Parcel Service we consider to be excellent. The net profit trend is increasing. The price pattern trend over the past year, as we mentioned, is essentially flat. The industry outlook is positive. GDP is still expected to be positive. The overall market outlook is also positive as well. The recent closing price, as mentioned, is $114.15, and we have a 6-month price target for UPS at $138. So this gives the company a 6-month upside potential of greater than 20 or 25%, and on top of that, it pays an excellent dividend of greater than 3%. So for all these reasons, we believe that United Parcel Service is the best dividend stock to buy right now. We hope you found this presentation helpful, and we'll talk to you again soon. Take care. Hi, everyone. Do you often wish you had a better feel for control over your investments? Do you often wish you had the ability to quickly get an answer to a question of yours when it comes to the economy or your investing choices? Do you often wish you had someone to bounce investment ideas off of just to be sure of your decisions? Well, I found you're not alone. And these are the reasons behind my firm, Kana Management Group. Kana Management Group is a registered financial advisor and investment manager in addition to being a podcast publisher. Our clients are professional individuals and small business owners. We help them invest and grow their retirement and savings accounts. Our special sauce, so to speak, is a comprehensive value and growth finding computer program we created that we talk about in our podcast. The program and our approach leverages time-tested growth and value investing principles and then some used by legendary investors Warren Buffett and Peter Lynch. Additionally, unlike others, we are forward thinking and use social media to both serve and educate our clients and their families to become better investors. We figure the better you become as an investor, the more you'll appreciate what we do for you. We now offer a free mobile app available on both Android and Apple devices that offer our podcasts, additional stock picks, videos, expert interviews, weekly economic summaries, news, and more, including the ability to quickly send us a question or concern to me directly from within the app itself for a quick reply. To learn more about our service and to download our mobile app, just visit our website at www.connormg.com. Or if you prefer, simply give me a call at 281-947-2201. That's 281-947-2201. All right, have a good week.